Welcome back, guys. Right now here the S&P 500 has pulled back here last week, and I see a lot of people are calling for the top. In my opinion, we still have much higher to go here in the stock market. The Ponzi scheme is not over. This is the world's biggest Ponzi scheme. This entire stock market is just a major Ponzi scheme, which is still gonna go another 32%, maybe even more, 35% higher before then we see mass correction. Because as I've been previously saying, I do believe this stock market is propped up, is completely managed. There's no real fundamental value for it to be so high. The real price of the stock market is at least 30-50% lower. So I do believe the real value is somewhere up around 2,600, something like that. I do think we can easily correct, if not even back to the COVID lows once the crash starts. So you that follow me, you know we have this massive pitchfork here. Those that are not familiar with these pitchforks, this red line is basically the only important thing you need to understand. The red line is where the algorithms are selling. We can see this pattern playing out over and over again. And it also acts as a magnet. So the algorithms and the banks are going to push the price up to this median line here. And that's what's going to cause this massive crash. So we can see here, this pitchfork basically is the one that we have here that goes back to 1974. We can see the same happened on gold, same happened on silver, and that it usually predicts the peak of an entire bull run. Same pattern we can see on Bitcoin as well. Very few people talk about this. So right now I'm still bullish here. I do believe any type of dip is worth buying here in the S&P. As I've been saying, it's hard to predict time. A lot of people ask me when I do think the top is gonna be. Right now, this is an estimate because usually the final fifth wave is usually the most impulsive. So we have here in the smaller time frame, we have a 1, 2, 3, 4, 5 that finished here, that finished the super cycle third wave. So we have a 1, 2, 3, 4, and right now we're in the super cycle fifth wave here. Before then, the World War III is gonna start once the stock market tops. So usually the fifth waves are the most impulsive ones. So the most impulsive ones usually top quite quickly. That's why my estimate with this would not make sense for a stock market to do something like this. This would not look like a nice fifth wave. So that's why, in my opinion, my estimate is somewhere around beginning of next year or mid next year. So if we continue this trajectory, we could be around April, May, or even June. We could have the top, maybe even a bit sooner. So that's what I'm looking at right now. Here on this small pullback, I'm actually entering long here. So if we go here, here's a different chart on the shorter time frame. So I use a similar pitchfork here from the COVID low. So we can come here on the daily time frame actually. So in this case, I use the COVID lows here to the highs, and then to the recent lows we had back in 2022. So we can see here we had the shift pitchfork, which we broke through. Then we had the modified shift here that acted as resistance. Then we retested it, that we also broke through. And right now our final target is this original. So that's going to be the next short-term target. I do think we're going to come up here, test this median line at some point, then have a pullback, and then go up to this median line right here. Because as you can see here, if we come on the bigger chart, we can demonstrate it here. So we've got the normal scale. So this is going to be the first target, this pitchfork here, as you can see, which is going to be around here. Then we're going to come up here and test the bigger pitchfork, which is going to be here, and that's what's going to cause this entire crash, where we're going to liquidate all the longs that have been accumulated over the years of the stock market. So right now I still believe this Ponzi scheme is going to go higher. We can see here on the shorter time frame, I had this as a 1, 2, 3, 4. I'm hoping the fourth wave is in. Those that don't fall, that are new here, you know I used the 0.31 Fibonacci. So I take from the second wave to the third wave. So we can see here the algorithms are buying at the 0.31 Fibonacci. This is my own developed Fibonacci. It's the only Fib I use, because this one is the only one that is heavily used by algorithms. And usually it predicts fourth wave bottoms. So we can see on the 0.31, we got the fourth wave here. And I do believe right now we're going to start the fifth wave, which is going to take the S&P to around 5,700. And then we have this pitchfork up here, which is going to be the next target. So something like this, I'm now looking for the S&P. For those that have watched my previous videos, you know we caught this low here as well previously, where we had this from the second wave up to the third wave. So we entered long here previously and caught this low. If we go here on the log scales, we had caught this low perfectly previously. We had this at 1, 2, 3, 4, 5. And right now we're trying to do the same on the shorter time frame. If for some reason the S&P would roll over here, all we do is we just take from the next low here. So we can use this low here or this low here, and you can stack them. So the next target would be around 5,400 or 5,444, somewhere here. But for the time being, I do like this as a second wave. I do believe this is very technically better. Plus, this market is very impulsive, so you want to try to enter on any pullback possible. So right now I'm still holding my long. It also aligns here with a nice demand zone. I am bullish overall on the stock market. So we might even do something like this before then we continue higher. And I do expect this year, as I've been saying since the beginning of this year, and even last year I was telling people on my Twitter, this is going to be one of the best performing years for the entire stock market. That's nothing to do with this economy. This stock market is just propped up. It's just going to continue to push higher, especially into the presidential election. And there's really no real value under the stock market. It's just the Federal Reserve keep pumping it up, keep buying the debt, keep buying the market. So for now, the game is higher. Of course, there's going to come a time where we have to correct this entire move. And that's going to be really, really ugly, unfortunately. I really hope I'm wrong about this. But I do think we're going to go into a massive recession within a year or so. Once we hit this median line, it's not going to be a fun experience. That's when you want to start either buying inverse indexes or want to find that cheap way to short this. Because that's the only way you can hedge yourself against a huge recession, in my opinion. Because we're going to have a massive recession, which is going to be worldwide once the algorithms start selling, because they have been accumulating this since 2009, buying up the stock market. Once we hit the median line, that's when we're going to have massive sell-off. Unfortunately, I hope I'm wrong, but we can see here the same happened on silver. If you come here on the silver chart, I'll just show you a quick demonstration because people are asking me about this Pitchfork. So here, this is a monthly chart on silver. So if we check here back in 1971, I think it was, until we had the big squeeze, silver squeeze up in 1980, and then we take from the bear market lows. And in this case, we want to use, I think it was a modify shift. We want to use the modify shift here. And if we attach this correctly to all the pivots, we can see here, let me just attach it so we can get the best, the most accurate data. You can see here, once you attach this Pitchfork, you can see here what happened to silver once the algorithms got up to this median line. That's when we had the massive top in silver, and ever since then we have never reclaimed this level at 49 on silver. Since 2011, silver has been a bear market. Right now I do think we're going to start the bull market. I made a separate video on this. But this is something similar that's going to happen to the stock market once we reach this median line here on the bigger time frame. Plus this Pitchfork much steeper, so we might see a really ugly correction. But there's a lot of opportunity to short it, of course, but I do think it's not going to be a fun experience. Overall in the world, once these companies, most of them are going to go bankrupt, and we're going to have this massive crash. So overall, I do think there's a lot of opportunity. You want to buy any dip in the stock market, please let me know what your thoughts are, where you think the top is going to be. I'm very confident this median line is going to be the top. You're welcome to join my Discord, link down below, if you want to follow my trades here. I do like to take these big swing trends, or the trades on the S&P here. They're usually very high probability, since the market is going to go higher. So you really want to, in my opinion, buy any dip here possible. Otherwise, I appreciate the likes I'm getting, and please subscribe, and I'll see you again, guys, in the next video. High above the sky, we are here.